Well, let's get to our discussion today because we already have an update of inflation for the month of May. And I already have me in the studio joining me live to look at this development is the Chief Investment Officer at AfriInvest West Africa, Mr. Robert Omotunde. Let's get talking very quickly. It's good to have you in the studio. Thank you for your time.
Thank you for having me.
Yes, this is what we have, 17.71%. I always like to start this way. What were you expecting? And higher, lower? What is responsible for this?
Of course, we were expecting higher, but I mean, we weren't expecting that it will hit 17.71. I mean, if you look at this, this is almost a 100 basis point increase in the headline inflation. Again, it's not surprising too much because we have seen increases in price levels across the globe. Russia and Ukraine crisis, the effects are still here on us. The impact majorly that we are feeling on gasoline prices in the U.S., which of course is dovetailing to what is also happening, in smaller economies. We are seeing higher cost of inputs in most, economies, U.S. particularly, and to the extent that you're seeing higher cost of inputs for imported inflation into the country. I mean, imported goods into into the country. That implies, imported inflation into the country. Understand what I mean? So what we're saying here is that the pressure point, it's not been common that at a point in time you see inflation as a global phenomenon. But as we see right now, it is a phenomenon that affects the, economies the world over. Perhaps because most economies are too interconnected and interdependent. So when you see pressure, for instance, you look at the ongoing war between Russia and Ukraine, and the implication on energy prices and some food items, is also, we are feeling the impact, not just in Nigeria, but, in the entire world. So that is the bane of, globalization, I would say, of economies staying interconnected with one another. And it's going to be on for a moment, because even from a global perspective, the biggest worry for the U.S. economy right now is inflation.
Yes.
Right. And you see that, FOMC meeting is holding, we should hear the outcome later this evening. And it's looking like there is a very high chances that the Fed may be considering a higher increase in the policy rate as against what they've done. For about 2 consecutive times, they've done from 25 bips to 50 bips. And the expectation for this meeting before last week, Friday, when inflation figure came out for the U.S. was that it would go up by another 50 basis points. But what we are seeing now is that there is a high chance that there will be a 75 basis point increase. And of course, that has implication for what is going to happen. We've seen U.S. Treasury yield, 10-year yield at unprecedented levels, like levels that were last seen decades ago. 10-year yield touched 3.44%, and there is a fear that it might even hit 3.5%. So, inflation is global, and to the extent that economies are interlinked, interconnected, we will begin to see the impact even on Nigeria. So that's why our inflation, and we have our peculiar issues as regarding, what pressure we face in terms of insecurity. And you read it out during the introduction. Food inflation is still major
that's what
and contributory to this.
19.5%.
19.5%. And then, consistently for about 2 months now, we've seen month-on-month increase in food inflation at 2%. That's really very high.
In practical terms, Nigerians would like to understand. You are an economist. Help us simplify this. What does it mean for us? Buying yams, buying this? What can we...
Interestingly, what we are showing now is the headline inflation. And even in the food inflation basket, right, saying it's 19% may not fully capture it. It now depends on the staple food that most Nigerians eat, right? In that food inflation index, you will find core items like yam, rice, fish, and the likes, right? So it depends on which do you eat. It's an aggregation of, different categories of food that have different weighting in the basket. So, for instance, it's possible that on a year-on-year basis, you have seen increase in the same size tuber of yam by as much as 50%. But because the effect is in a basket, by the time you put it in a basket, the weighting on that basket will bring it down to the level that you're saying. And so when we are saying 19%, it's only the weighted average of the food items that make up that basket which is believed is representative of the major food or staples that Nigerians consume. In the real sense, those who are low income level and have a particular kind of food that they mostly consume are likely going to feel the impact. And it's worrisome that from a relative standpoint, food is more expensive in Nigeria than even any other thing. And I say relative standpoint, relative to the rate at which prices are increasing on a daily basis. And if you look at, the basis for inflation computation in itself is what we call COICOP. That's classification of individual consumption by purpose. And if you disaggregate from the perspective that most Nigerians are still living, below the poverty line, right? We have about 100 million Nigerians living in poverty, meaning that they consume they spend, less than about $1, 20 cents or thereabout per day. That's less than 1,000 naira to be specific. Now, that means that to the extent that their income is not so big, as food prices are rising, because, the demand for food is inelastic, is inelastic because people must eat. You need food for survival. So as prices of food are going higher, you will need at the minimum that portion that is sufficient to keep you alive. So no matter the cost of food, you need to buy it.
Yes.
So what you then see is that for low-income earners, they then have to shift from other necessities of life, right? If they were staying in bigger apartments before, they may need to consider a smaller apartment just so that they are able to feed, because you need food for survival. So that's why it's very major. And, it's just so unfortunate that, we can sit here and dissect, some of the impact, but we cannot fully contextualize the impact of rising food inflation on any economy, because people cannot even think straight, And the tendency to go into crime comes when people cannot afford the most basic thing of life, which is food. So that's why it's very important, and we need to analyze it from
the impact of the decision of the MPC to shift rates from 11.5% to 13% is something that many have also been talking about. Any direct impact on these figures for this month?
Theoretically, what we should have seen, right? The reason why economists argue that raising interest rates help to fight inflation is because inflation is believed to be a monetary phenomenon. So that is, anytime you see rising price levels, it is believed that it is linked to money supply one way or the other. And it is consistent with what we see. Like in Nigeria today, we've seen increases in money supply on a month-to-month basis. And these increases have not been followed by, direct increase in the reserve. So the implication of that is you see an increase in money supply, broad money supply as we say, but you don't see an increase in the reserves. The implication is that your exchange rate will keep falling. And that's why we see that on the parallel or alternative market, as we call it now, you've seen consistent depreciation of the currency. So that said, it means that if you must put a rein on inflation and you follow, the theoretical principle of raising interest rates, the implication is that we should have seen some sort of, moderation in price level. But it's not just peculiar to Nigeria. The US Fed raised interest rates 25 basis points, 50 basis points, and have committed to a 50 basis point increase going forward. But they have also said that if there is a shift in macroeconomic variables, then they may need to consider something higher. And that happened on Friday because, again, there are some aspects, especially when inflation is supply side driven, which is the case in Nigeria right now. We have a supply side shock that is causing inflationary pressure. So when you raise MPR, and even raise the price of credit, you may not implicitly tackle the foundation of that inflation because it's supply driven. It's a supply side factor. It's a different thing when inflation is as a result of increases in wage rate and the likes. But this is not the case. What you're saying, output is even decreasing because, you have much money in the system, but the output is not increasing with the much money you have. That is inflation, right? And the best way to fight it may not even be by raising MPR. And that's why you will not see a significant, impact of a hike in MPR. I am one of the economists that argue that you cannot fight a cost-induced inflation or a cost-push inflation by, using instrumentality of interest rates. Because it will just seem like you're complicating the matter. Let's think about it. If inflation results as a result of high cost of inputs, and then I raise the price of credit, which is interest rate, what it will do is the cost of borrowing will increase for the manufacturing companies. And what they then do, depending on the elasticity of demand of product that they sell, they will tend to increase the price again and pass it on to consumer. So you can actually see, to a certain threshold, increase in interest rates fueling more inflationary pressure within the system. So again, it depends on how much we have understood the complex environment where we operate and our own macroeconomic model as to know what portion or what proportion of an interest rate hike will result either in a in checking inflation or even in aggravating it.
Thanks for that clarity. I like that. Now, the advice that Nigeria should prioritize maybe its debt, of course, growth, and of course, and foreign exchange issues by the World Bank and of course the IMF is something that is also on the front burner. With this situation, do you think that's the way to go? A dollar changes at the parallel market. Yes, we'll have to talk about that. 603 naira to a dollar, despite all the efforts by the CBN and the reserves, is not also looking good.
Absolutely. So you see, there is a simple way to look at exchange rate issues vis-a-vis inflation.
We've been on this for a while.
Absolutely. So I mean, the way to look at it is, let's do a comparative analysis of a country like Ghana, right, who have faced similar issue where domestic price level have shown some level of pressure. Now, what you see in such instance is you've seen a country that has been responsive. Interest rate, benchmark interest rate in Ghana. Now, I mean, in Ghana, you can comfortably buy instruments within the double digits for a 1 year, tenor, because they've been able to raise interest rate and still keep attracting foreign portfolio investment into the country. Right now, we are not able to attract much in terms of portfolio investment. Think about it. The longest yield you can find on a risk-free investment in Nigeria today is 13%. And that is for a 2050 instrument, which is a maturity of about 28 years from now. So you think about it. Now, that same 13%, there are dollar-denominated instruments of emerging markets, Nigeria inclusive, Ghana, Angola, and the likes, that will give you that same exposure or that same return without exposure to currency risk. So it doesn't make economic sense for any investor to come into Nigeria and invest at the level of our interest rate. And if we don't get much foreign portfolio investment into the country, it won't add to our reserves. I mean, this is a market that can potentially generate over $20 billion of foreign portfolio investment on an annual basis. This country has recorded that in the past. But our interest rate environment right now does not support it. Now, MPC tried to raise MPR, right, by increasing it by 150 basis points, unprecedented in recent time. Yeah. But what then happens at the market level where the DMO plays? We haven't seen significant increase in interest rates. And for as long, nobody buys MPR. Remember, we always say that, it's just an indication, an indicative rate that is meant to control how investors perceive the rate. But that has happened from the MPC Central Bank's point of view, but from the DMO's point of view, who is the biggest supplier in the domestic bonds or debt market, we're not seeing that increase. And for as long as you don't see that, the attraction to come to Nigeria, it's not there. No. From a scenario point of view, I imagine that for foreign investors to still find it comfortable with all of our currency risk, inflation risk, polity risk that they have to face, security risk inclusive, they will be asking for something close to 19-20% if they must come to Nigeria at this point in time. Do I see that happening in the short term? Never. I don't even think it will happen as we go into the election period.
That's how we'll wrap up. Yep. Moving into the elections. What are you thinking? Are we going to continue on this trajectory, this high in inflation rate? Because policy issues are not taking center stage anymore. Politics everywhere. Absolutely. So what are your projections?
Well, I think that politics is part of things, right?
Of course.
Policies will not come if you don't have the right politics. So that's why we need to discuss the politics as well.
Policies will not come
if you don't have the right politics. So what we will focus on right now is, I bet maybe it's too late to start holding the current government to put some things in place, right? I mean, this is 1 year or less than 1 year to go. So we will rather focus on the incoming government, right? And I think that across board, from the two major political parties and other parties that are in, everybody agrees that some things have to change fundamentally. Yeah. So as we go into 2023, and I think those are going to be the issues that most electorates will focus on, right? Whatever mistakes were made by the PDP and now APC, they are now in the past. I mean, the two sides have tasted power at the center, right? So though we can argue that one was 16, the other was 8, but whichever way, the two sides have tasted power, at the center. So now Nigerians can hold them to account. When you had power, what did you do with it, right? And on that basis, they can be able to judge. But more importantly, policy issues will take center stage. People want to really know what's your leaning. Yeah. If you are the type that will focus on market, or you are the type that will still protectionism.
Yeah, protection policies that might even affect the market.
It's really affecting us, right? Yes. Again, these are issues that investors, not just investors, electorates will bring to the front burner, right? The other issue will be our electorates are sophisticated enough to know what the right questions they should ask, from these political parties. But we keep fingers crossed. We still have a number of months before the final
These
election.
months will be very interesting, I must tell you. I must thank you so much for your time. Interesting conversation as usual there. That's Mr. Robert. Our motto today there is the Chief Investment Officer with AfriInvest West Africa, giving us insights into this breaking news. That's inflation figures for the month of May, 17.71%. Thank you so much for your time on the show. We appreciate this.
Thank you for having me.
All right.